used for healthcare expenses, but the high costs and fees often will outweigh the benefits. I'm Elise Glink. Here's today's Real Estate Minute. Here is my answer to a question I got on using a reverse mortgage to help pay for medical bills. Now, it's a simple question, right? Should I get a reverse mortgage? But there are so many factors to consider before actually applying for one. Let's start with what it is. It's a loan product only available to homeowners age 62 or older who have a very high level of equity in their homes. Okay? Reverse mortgages allow you to tap into that equity, and they do not have to be paid off. Your reverse mortgage does not have to be paid off or anything paid on it until you sell the home or move permanently. Here's the problem. Reverse mortgage fees and costs can be quite high, and the cost of a reverse mortgage may exceed the healthcare costs themselves that you're trying to deal with. If you're dealing with assisted care or long-term issues, you may find a reverse mortgage worthwhile, or you may want to consider selling your home and using the proceeds from the sale to defray living and healthcare cost expenses. Reverse mortgage lenders can distribute funds in a lump sum, or they can pay them out over time, similar to an annuity. But remember, in addition to the age requirement, right, 62 or older, the borrower has got to have sufficient equity in the home to qualify. In other words, you must have no loan or a very, very tiny loan on your house, because what you're basically doing is taking your equity and you're financing the equity. You should also know that reverse mortgage lenders have different parameters for granting loans, and some of these relate to the value of the home and the age of the borrower. So the younger you are, the more you'll be able to borrow. I mean, reverse that. The older you are, the more you'll be able to borrow. See how confusing it can be? That's why I want you to talk to a reverse mortgage lender about your options. And without applying, try to determine what the costs will be. The lender should be able to tell you this to obtain the reverse mortgage. And you really want to understand how much of a lump sum you might be able to get in return. Then you'll start to have a better idea as whether a reverse mortgage is actually right for you, or whether you should be using it to pay off your medical bills. One final thought. I'll often tell people that who are considering a reverse mortgage that they really should think about selling their home entirely. I know that once you've lived in your house 20, 30, even 40 years, you're really deeply connected to it. I am deeply connected to my house. I've been there 20 years. But I got to tell you, if I had medical bills to pay, if I could no longer afford my taxes, my insurance, what's left of my mortgage amount, I would sell my house. And I would take all that equity, which most of that, a huge amount, you'll be able to keep tax-free because it's your primary residence. And I would use that to pay my bills and to live somewhere far less expensive. Once you lower the stress of where you live, it can make a huge difference in your overall health. I'm Elise Glink. If you want to learn more about investing in real estate, or just real estate in general, you can check out my Intentional Investor, How to Be Wildly Successful in Real Estate series at thinklinkstore.com. There are 9 ebooks, 9 videos, lots of information. Use the discount code BUYNOW for substantial savings, and be sure to visit my website. Sign up for my free weekly newsletter. It's got great information for you. And you'll see I'm working to rebuild America one house at a time.